India has a excellent growth trajectory. GCC market by design, they have lesser population. It doesn't have the mass that India has. No longer want someone who's like reading the numbers. They want someone who can. The biggest risk which happens is typically when we are doing an M&A.
What type of a risk you would say this is a no-no risk? I won't take. What are the risks that you say that, hey, I can still take and manage?
Reporting transparency, not just in terms of the financial numbers, but as well as the non-financial metrics could be like the employee data, the customer data, number of customers, who walks away, who stays and why they walked away.
Emphasis on the governance. Still they falter on the governance itself.
Right. So I would.
What would be the top 3 techniques to improve the cash flow management?
I think those days are gone where we say that it's the sales team's job to achieve the budget. I think that is gone.
Tell me, what are the various initiatives that you undertake to prepare the company for an IPO?
3-line demarcation where the core team, the core top management, prepared for an exit, whether it's a company as an investor or it's your personal life, right? And that's when I'm not a big fan of putting a number of hours in someone's calendar, right? So I believe people should be left to make their choices.
Does MBA help in CFO becoming an effective CFO?
Transparency and fair reporting would always supersede managing the investor expectation.
What would be the top 3 techniques to improve the cash flow management?
Once we identify a problem, we try to like holistically view the problem and then try to solve it as a team.
Welcome to Stories Behind the Numbers. Here we meet leaders who build businesses and create value to stakeholders. We will explore with them how they make decisions, the decisions with operating leaders, management committee, and at board level. We'll also understand from them how they build teams, lead teams, and manage the teams effectively to create great results. Here we have with us in this particular episode a seasoned finance professional, Mr. Vivek Srinivasan, who has over 20 years of experience in corporate life, have built lots of businesses, and he has worked in Ernst & Young, he has worked in Goldman Sachs Analyst, and he was a CFO of Al-Sharif Investment Holdings, and he was also a CFO of Neuberg Diagnostics as of now. Let's welcome him to the show. Welcome, Mr. Vivek.
Right. Thank you, Buddhi. Thanks for the kind words. Yes, as an introduction, I started off with Ernst & Young in the audit department, moved to Goldman Sachs in the investment banking, which was a bit more exciting than the stat audit. Then I obviously moved to Qatar. Was there for 12 years, fantastic time in Qatar. Then moved to Dubai, did IPO, bond, capital market transaction, and now I'm happy to be here back in Chennai after a 15-year gap. So it's good to be here. I've seen a lot of things evolving in finance, and it will be fantastic to share some of the experiences with you.
Excellent. So let me start off with this, Vivek. You have worked in Dubai for a good amount of years, and now you are working in Chennai. What is the difference do you see in a corporate area?
A lot. I think India has a excellent growth trajectory. GCC market by design, they have lesser population. It doesn't have the mass that India has. It is growing. No doubt that the infrastructure in the GCC is great, but I think India has a distinct advantage considering the amount of skilled talents that's available over here, the growth which is happening both in terms of infrastructure and the economy as a whole. And I think India as a country is also moving to a place where rest of the countries are looking up to India in a respectful fashion, right? They consider India as pioneer in very, very different fields. For example, Apple wants to come to India. Apple has, I think, Tesla sold its first car yesterday or day before yesterday. So every single international company wants to have their presence in India. So that's an advantage which you can't take it away from India for the next 10-15 years. What China was 20 years back, I think that's the place India is.
Excellent. Vivek, you work closely with private equity investors. Can you tell us what are their expectations from a CFO?
So I work both with private equity investors and public equity investors, considering the last two transactions where public market transaction and the current one is a private market transaction. Uh, so in terms of investors, I think the role of CFO has changed. The expectations of a CFO have changed. They no longer want someone who's like reading the numbers. They want someone who can tell the value proposition which comes out of the numbers. CFOs were traditionally more bookkeepers, right? But now investors expect CFO to be like, gatekeepers of a company in terms of governance, in terms of the strategy, in terms of the growth, and all those things, right? Like, for example, even if a brilliant idea comes, but it's up to the CFO to take a call whether the numbers would make sense or not. I think the investors expect us to take much more calculated risk, and they rely a lot on CFO to ensure that the risk is worthwhile taking. And that's the role this has evolved into. So we take care of governance and also ensure that the strategy which is being pursued by the management uh, has its advantages, and the numbers which comes along with the strategy make sense.
Great. You talked about um, uh, risk management. Can you give one or two examples of risk management that you championed or practiced uh, in 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 your role?
Sure. So uh, the biggest risk which happens is typically when we are doing an M&A, right? So M&A, there's nothing certain. There always been, even the bigger entities like HP, which have done a lot of M&A, which didn't work out the way it should have been. Similarly, there are M&As which should have happened. Like, for example, Yahoo, I think they wanted to buy out Facebook, but it didn't materialize, right? So sometimes uh, the fear of missing out in case you don't do an equation. At the same time, some equations don't work out the way. So that's one critical area where we have to manage a lot of risk. And in both my past roles, we have done plenty of M&As. Uh, that's where, as I said, the CFOs come and play a major role, seeing whether the synergy will materialize or not. There's always a probability linked to it, but you build different scenarios to see whether the the risk that we are taking is worthwhile or not. Whether what will be the numbers that will play out in different scenarios. There's nothing guaranteed in this market, right? But as long as we are confident and we put our head behind the numbers and say that okay, this equation is going to work, then that is a lot of risk mitigation for the top management. And a- at the time of equations is what we play critical roles doing the full due diligence.
Vivek, I'm just curious on what type of a risk you would say this is a no-no risk I won't take. What are the risks that you say that I can still take and manage? Can you give some examples there?
Sure. So at this point of time in life, the biggest is that I try to take into account is always the brand and the image risk, right? So for example, if I'm acquiring a business where the promoter has a sketchy track record, that's definitely a no-no for you, right? So the business, even if the business is weak and if we are confident that it can be turned around, that's a risk that we can take. But when the governance model is flawed, that's super important, and that's where we'll put our foot down and say that this is not going to work, and we say no.
Got it. Thanks. I'll move from the risk management to the investments. I think you have a distinguished experience in having evaluated over 200 investment opportunities and made investments in your previous role as a CFO and head of investments. Tell us your approach to that investment and your investment philosophy.
Right. So uh, we used to do a lot of investment outside GCC, which is in the European market, US market. So we had a very, very structured way of investment. So obviously we are doing both public equities and private equities. 80% of our investment were in public equities. So we went through the drill of again understanding the company, as I said earlier, understanding the promoters, the quality of the promoters, the quality of the business, and whether there is a potential to scale up or not. Some business, more specifically in the technology space, for example, Apple, with a single product, they have evolved a lot, right? They sit at any point of time billions of dollars in cash, and they have a stronger opportunity to grow. So we look at both opportunities where they could grow and the current governance structure, which includes the board and the promoters and all those things. So once these two are aligned, and we believe that the numbers make sense, they are disciplined, they have a they have much more transparency in terms of reporting. That's when we used to go and invest in those companies. So this could be said for public companies, but private companies also, we were more comfortable with the companies where there is a reporting transparency, not just in terms of the financial numbers, but as well as the non-financial metrics. Could be like the employee data, the customer data, number of customers, who walks away, who stays, and why they walked away. When there is a transparency, obviously transparency builds trust, and once you build trust, I think performance comes along with trust.
You made an emphasis even during risk management as well as part of your investment philosophy on the governance models. There are companies recently, due to lack of governance, have failed miserably. Without naming them, uh, do you have a point of view on why, despite most investors put prominent emphasis on the governance, still they falter on the governance itself?
Right. So I would, there are twofold reasons. That's how I see it. Uh, One, once you are in the public market, there is always expectation to deliver profitability, revenue growth, and all those things. Now, some promoters at some point of time, which has happened both in India as well as in many of the European countries, people have fudged the financial. They have over-reported the financials, over-reported the revenue or the profitability or both, uh, and then they think that that's how they will manage the market. And that's why I keep saying that there's always going to be peer pressure. There's always going to be a point of time where the business is not performing well, your competitors are performing well. That's when your ethics, your integrity, your honesty would come into play. And at that point of time, if you can explain to the investors the reason the business is falling, then you can re-strategize the business, accept that there are a couple of quarters that we didn't do well, and move on. That's when this events won't happen. uh, I'm sure Infosys, TCS, Wipros of the world have gone through a phase where there's no revenue growth or the muted revenue growth or fallen profits, right? But I think they have evolved the governance model so well that they believe that transparency and fair reporting would always supersede managing the investor expectation.
Thanks, Vivek. Um, you are managing uh, currently the operation, which basically has a lot of cash flows, and you also have multiple branches spread across India. How do you manage cash flow?
That's a good question. So typically investors look at
Cash flow is a key, right? And so I heard a saying that revenue is vanity, profits are a sanity, and the cash flow is reality.
I know.
Right? So how do you manage the cash flow?
Yes. So typically investors use EBITDA as a measure, right? But we also look at, we more than the EBITDA, we also look at what is the cash conversion from EBITDA, right? So typically what happens is EBITDA is technically your cash if you don't have, capex, or the finance cost and other thing. But for me, on a daily basis, how much of EBITDA gets converted to cash and how much disposable cash we have with at any point of time, and how much cash accumulation I can do over 2-3 year period is what I look in as my key metric. So yes, we track cash flow very meticulously. Have a good team which does like branch-wise cash flow to see that there are adequate cash flows coming out of it. But as you said, cash is what is reality. That's what we depend more than any numbers. If my numbers translate into cash, if I have that cash sitting in my bank account, whether for my company or for my personal purpose, it doesn't matter. As long as I have it, then I'm confident that the business is doing well.
what would be the top three techniques to improve the cash flow management?
Uh, so the old school thought is to cut down the expenditure. I'm not a big fan of cutting down the expenditure. I would focus on strategies that could create revenue growth. More specifically, because we have in a healthcare industry, and healthcare has would probably grow tenfolds in the next 10 years, right? So from that perspective, I think we should build teams, but to improve the cash flow, I think our first preference would be to put our efforts and our expenditure on revenue generating activities. That would be the one. And obviously, there are other avenues where we could cut down. For example, capex is one area, right? We don't need like fancy, super fancy capex expenditure pulling down our cash flows, right? So we should have more sane approach towards our capex expenditure. So revenue, minimizing the capex, those would be the two strategies that I would use for uh, managing the cash.
So basically, spend where you need to spend. Right? Yeah, excellent. Uh, you talked about the healthcare is going to grow 10x. Can you throw more light on it?
Sure. One for sure in India, healthcare is still, I would say, in a nascent stage. We are evolving, but have we evolved enough? I don't think so. There are a lot of technology enhancements coming in. You would have heard about AI in healthcare, which is AI technology, which is coming in. Similarly, people are also going more and more health conscious, which means that if I were to compare 10 years before and people going to gym now, they would be probably like 50-fold, right? I'm sure everyone in our community is going to gym more regularly than the previous. So once the health awareness improves, people spend a lot of time thinking about the preventive health checkups, preventive healthcare technologies. That's when I think the market itself will grow. The companies in India will evolve or will adapt to the changing mindset of the people, and then that growth will be more natural. It will not be forced in. It is the healthcare growth is going to come because of the natural change or shift in the mindset that is happening in the community as a whole.
Excellent. Thanks. Just question on that. Uh, How do you uh, help the business to set pricing? Um, because since you are in the healthcare industry, you need to also be mindful of patients, but that's at the same time we also your customer, but at the same time there is a stakeholder expectation on the profitability. So, is there a approach towards the pricing?
Uh, so one, pricing is mostly determined by the market itself. There are places where we look at the competitor pricing, but at some point of time we also look at places where we are way ahead of the competitors, and that's why we take a aggressive pricing stance. We don't get into a environment where we are giving aggressive discount just to win back the customers. That has never been, at least my personal trait. So we look at discounts on a very sane level. We look at the market. We know what the market is expecting in terms of the pricing, but there are few things where we are technologically way ahead of our competitors. That's where we have a clear pricing advantage, and there are some place where you are slightly cutting down the prices to be ahead of the market. But there are other areas where pricing is much more aggressive because we know that this technology is available only with us, and it's super critical for patient care, right? So those are the places where we have a little bit more aggressive pricing. What it helps us to do is also we invest those money into further technological improvements, which eventually again uh, adds back to the patient care, right? So that's where it all comes down to.
But one of the important role of a CFO is to determine budget, set annual operating goals along with the top management, and also over the course of the period to achieve those targets. What's your approach? How do you ensure achieving the business goals, annual operating plan?
Right. So again, old school CFOs would be just keeping down the numbers, but I think things have evolved. We speak more regularly to the business leaders, understand what their challenges are. Uh, when I say what their challenges are, I mean what is the challenges that they are facing that could hamper. not achieving the annual operating plan, right? So those are the regular discussions we have. It could be a very informal way of discussing with them, get the things right, because once in an informal environment, everyone is willing to like put their foot down and say that these are the problems that you're facing, or these are the support that we need from the management. It could be a capex support that should have been approved by me, but which they have not approved, thinking that that might not make profit, right? So those are the frequent interactions with business leader that has to evolve as a part of a company culture, and that's when you make sure that your team is well equipped to uh, achieve the budgets and target. Uh, I think those days are gone where we say that it's the sales team job to achieve the budget. I think that is gone. Now I think all of us have to work in a team. It could be a marketing team. Marketing team has to provide the support to the sales team. Similarly, finance team have to support the sales team. Even our IT team, which we today at this point of time we consider super critical, they have to give their support to the business team, and that's the only way the business can be grown, and that's the only way all of us grow together and we achieve the budgets.
Can you share with us an example of how a team or a business unit which lagged on numbers, you are able to meet or exceed the business targets?
Uh, so this I could give one example which I can clearly think is one of the places where a particular center was not operating very profitability for various reasons, including like a competitor starting right across the building, right? So that's when we sit down, we see how it can be managed, whether what needs to be done to make sure that the retail walk-in top keeps coming in. And those are the areas when we start giving, for example, BOGO, which is buy one, get one. The marketing efforts are more concentrated towards that particular region or the city to ensure that that region also performs up to the mark, right? But again, like marketing also goes hand in hand along with our customer relationship, right? Which could be a call center, which could be like, the regular reception where people are coming in. So once we identify a problem, we try to like holistically view the problem and then try to solve it as a team. So that's why kudos to like all the teams that we work with, including marketing, IT, the customer relationship, that we put in a lot of effort to make sure that a particular region, when it's not doing well, there is sufficient support to give a turnaround time.
Got it. It's an interesting example because if a particular center was not doing well, so you analyzed and you said that probably the revenue was not meeting the target. You co-opted the marketing team, you brought in the tech team, so that the revenue is boosted, which is the core reason for underperformance on the overall targets, and then you are able to achieve. Um, Tell me, what are the various initiatives that you undertake to prepare the company for an IPO?
Right. So uh, IPO is more of a firm-wide exercise, right? So most of them think that it's a finance department's work, but the expectation of public market and the regulators have come in such a way that it becomes a firm-wide exercise. When I say firm-wide exercise, it means that they're typically complaints management, internal control slash internal audit, IT systems, which gives us the audit trail and other the quality of the financial reporting, uh, business continuity methodology, disaster recovery systems, uh, the quality of the people, how we recruit people, how we manage attrition, how we do skill development within the company. So all these are the factors which are typically in a colloquial language are called as the IPO readiness. And that's the first step that we do in case of any company going for an IPO. And then the IPO readiness exercise, which covers all these different fields, are understood, and then we start working on an implementation plan. So typically it's like back working, depending on the date when you want to go for an IPO, you need to give at least like 1 year when you are working like a listed company, and you need 1 year for this implementation phase, right? So you need 1 year to basically implement whatever. Some companies might be mature enough, they might not have a lot of gaps. It might much easier to do it for them. But some companies where you might need additional efforts, that needs to be put in, and you take care of all the areas within the firm. And that's why I call it as a firm-wide exercise rather than a finance department exercise.
Absolutely, absolutely. But I think the CFO, along with the CEO or the executive director who really drives this in most companies. And I think what I am curious and also uh, puzzled is how the firm, the company, manages both the things. Like you continue to show growth and profits, and then you need to increase the margin. The last one is to prepare the company for an IPO. So you are really doing three things at the same time. Uh, what typically the challenges the company face?
It's always a juggling job, right? That's why it's an exciting place to be there, right? At the time of IPOs when the transformation happens, and it's always exciting. That's like looking at your kids going from from schooling to a college to an employment and so on and so forth, right? So that's the same journey. Yes, we have to manage the revenue, we have to manage the profitability, all out. That is true, but that's where we have a clear three-line demarcation where the core team, the core top management focuses on strategy, innovation, so that the business growth keeps coming in. The business is planned in such a way that you have a 5-year uh, strategy and planning, right? Because you invest in strategy now, it might give you a result only after 2 years, but the investment has to be made today, right? So the top management, typically the non-financial, the executive directors, they focus on the business innovation and strategy. uh, we are the bridge between the investors and the board of directors, right? So we kind of help them in their strategy, ensuring that their objectives are met. At the same time, we make sure that we are investor ready. The investors who are either there as a private equity investors or the public market investors who are going to come to us in the future, we are aligned to their expectations. So we act as a bridge. The core management does the strategy, execution, and innovation.
So what you are saying is these three important goals are shared amongst the top management.
Correct.
Correct. Excellent. And so given that, a lot of work that need to take place to really achieve that, what's your view on the sensitive 70-hour uh, per week work crew?
I'm not a big fan of putting a number of hours in a uh, in someone's calendar, right? So I believe people should be left to make their choices. There's a point of time in life when I used to work only 40 hours a week, right? I used to spend a lot of time with my kids, more specifically with my daughter and son were born. I used to enjoy that phase. Not that I neglected work, but I had my choice. I chose family over work. But this is a point of time where I'm open to working. My kids have grown up. I enjoy doing the transformation phase. I would do 50, 60 hours, but it's completely my choice. There'd be weeks where I would do only 50 hours. There'd be weeks that I would do more than 60 hours, but that should be left to individual choice. Management should not dictate what a person is doing, how he is balancing his personal life and professional life. And that view would always stay the same.
Yeah. One personal question. Does MBA help in CFO becoming an effective CFO?
Uh, yes and no. So sometimes education does help. Uh, MBA actually helps you think business as a whole, because as a CA you are thinking more of numbers, but MBA gives a different perspective to life. But more than that, I think once you get your hands dirty while doing the actual work, when you actually involved in the business growth, that's when your personality grows, and that's when you evolve as a better CFO.
Got it. Okay. Since I am always uh, excited by your investment ideas and strategy, anything you would like to share about your investment philosophy for your own personal finance?
Right. So if we have started doing our personal investments 5 years, 6 years back. We mostly do in equity stock market. We have a group of team who kind of help us in strategizing the investment. 90% of my uh, portfolio sits in equity. Right. Yes, we look at long term growth of the company. We like as I said, we look at the since I'm a CFO, I know how important or critical the governance model is, right? So that's the point of time when I'm looking at a company from a investor lens. So we look at good governance. We take calculated risk on certain companies where we believe that that the that even though the current performance might be bad, their long term growth story is intact. When we have a value stock available, we go and pick it up, and we do a lot of trend back testing of the data to ensure that our portfolio is always sane and stable.
So you work with as a team to discuss about investment ideas.
Yes, so we have a team which tracks all the stocks closely, all their reports, the quarterly reporting closely. We call it as EPS star. People who have grown consecutively for 3 different quarters is what we track. We like those companies. We also look at their governance model. Who are the promoters? What's happening over there? Whether there are any cases, whether their growth story is intact or not. We like, I personally like companies where they had couple of bad quarterly performance, investor punished them, but the companies where I believe that they had a bad performance but their growth story is intact, those are the kind of companies I would put my personal money into.
It looks like you don't do F&O trading.
No, I'm not a big F&O fan. I look at I mean yeah, more like a fundamental plus technical, but we look at long term growth story.
Okay. What is your I'm going to the quick fire now. So you can give in a one word response or a one sentence response. What is your favorite asset class?
Equity, obviously.
And what is your favorite sport?
Tennis. It used to be cricket, but now it has moved to tennis.
Okay. What is your favorite way to de-stress after whether it is a board meeting, quarterly closing, annual closing?
Always playing with my kids.
Okay. You're a morning person, night person.
Morning person. I go to bed early.
What is your favorite go-to metric when it comes to your financial analysis?
Cash conversion, EBITDA to cash.
If you are not a CFO, what you would have become?
Most likely a teacher, teaching accounts to 12th standard students or probably a college guys. That's what I would have done.
Yeah, I get that most. What is the toughest decision you have made as a CFO?
Uh, Investing in certain companies which could have gone either way, but we still went ahead and invested.
Okay.
And it's good when it pays off.
What is a book you would recommend to me?
I always love Sherlock Holmes. That's a fantastic story. That's the way. That's one story which always teaches me how to observe and not just look. And I still follow the philosophy. So if you haven't read Sherlock Holmes, it's definitely worth a book that you should read.
Excellent. Last 90 seconds. That you want to share your perspective about the world, life, anything.
Yeah, as I said before, you should always be prepared for an exit, whether it's a company as an investor or it's your personal life, right? And that's when you have to think through, like at any point of time, this could be your last day in the company, this could be the last day in your life, and that's how you have to plan your things. Once you are always exit ready, whatever happens, you would never be fluttered. You will always be a happy soul, and that's the feedback that I would always give to my children as well.
Thank you, Mr. Vivek. It was nice and really exciting to have this conversation with you. Thank you.
Thank you, Bhuti.
I hope you enjoyed this conversation. We will be having more finance leaders who will come into the show and share their stories and their journeys and how they achieved their success. Do subscribe to our channel for you to get an updation on the new episodes. Until then, goodbye.